Just like I warned would happen, we are now seeing analysts and traders come up with, they're calling a top every other day. We're starting to see uh, all kinds of different reasons for why the stock market is about to top or it's going to crash. I predicted this was going to happen, but the reality is that we're just not close to a final bull market top yet. So there are several reasons why markets, uh, big bull markets, almost always end in a euphoria phase or a bubble, so to speak. None of them really have anything to do with fundamentals. Uh, Bubbles are about emotions, and possibly to some extent, central banks tend to exacerbate uh, the uh, rise in asset prices by uh, monetary policy errors. They keep interest rates too low, too long. They print too much money. They make money too cheap, and this exacerbates the problem. But the main cause of a bubble is nothing more than human emotions. When markets go up for a long period of time, many years, at some point, people convince themselves that this is normal, and they just expect price to continue to rise, and then um, you see your neighbor making money in tech stocks in 2000. Your neighbor's getting rich. He's selling his house, buying a bigger house, buying expensive sports cars, going on expensive vacations. At some point, you want a new house and you want a sports car, so you start to chase. In 2006, it was real estate. You see your next door neighbor making money, flipping houses. You want to make money, so you start to flip houses. Uh, your competitive hedge fund manager is making money, chasing a trend that's been in place for many years, and so you jump on the bandwagon as well. Uh, and that's basically all it amounts to. Is just humans are herd animals, and when the herd has been running in one direction long enough, we become convinced, or we manufacture a reason for why price is going up and why it's going to continue to go up. Uh, I'm going to diverge here for a second and discuss this behavior because it is happening right now in Bitcoin. So we're seeing all kinds of excuses for why Bitcoin is going up and why it's never going to go down. Fundamental reasons for why this time is different. And fundamentals aside, uh, purely on price action, this is exhibiting all the signs of a bubble, where Bitcoin has rallied more than 400% over in less than a year. At the recent top, it was stretched 300% above the 200-day moving average, and that isn't a sign of fundamentals driving a market. That's a sign of emotions driving a market. You're seeing your neighbor making a lot of money in Bitcoin, and you want to make money in Bitcoin. So we're starting to see that flood of participation as people start to chase price higher because they want what other people have. And I can tell you this is going to end just like every other bubble in history. At some point, the parabolic move runs out of buyers, price collapses in a waterfall event, and everybody loses all of their investment. And I can tell you that governments are just not going to allow people to create their own currency, which is basically what the blockchain chain technology has done. At some point, it's going to become public, which will allow every Tom, Dick, and Harry to create his own currency, and And I can tell you that governments are just not going to allow people to create their own currency. And here's what else is going to happen. At some point, I tend to think we may have already seen the top in Bitcoin, but if we haven't, it's not going to change the fact that the bubble is going to pop at some point. When it does, people are going to lose their life savings. They're going to start screaming that they want restitution. They want somebody to do something. Government will do what it always does. It will come in and start to regulate. And as soon as the bubble pops in Bitcoin, then governments are going to step in and they're going to put a stop to this Ponzi scheme, and that will be it for Bitcoin. Now moving back to the stock market. So again, like I said, we're seeing all kinds of analysts coming up with all kinds of reasons for why the market is topping. Valuations are too high. North Korea is going to start a war. The market has been rallying for 9 years, 8 years. Whatever reason you can invent, we're seeing it right now. But the fact is, we have not seen the kind of sentiment yet that would indicate that we are near a bull market top. Bull market tops occur when we start to see that kind of sentiment that we're seeing in Bitcoin right now. The market rallies 100% or more in a year or less. Price stretches a long way above the 200-day moving average, and you tend to see retail traders, mom and pop, flooding into the market as they chase price higher. Like I said, they see their neighbor getting rich, they want to get rich. You see your competitive hedge fund manager getting rich, chasing price higher. At some point, all of these fundamental reasons for the market to go down become meaningless. All you know is that your neighbor or your competitor is getting rich, and you're tired of that. You want to get rich too. So everyone starts to chase, and that period of time is when we start to see these sentiment extremes. So I'm going to show a couple charts here that you can get this sentiment data from sentimenttrader.com, and I'm going to strongly recommend anybody that is serious about trading the markets, you need to have a subscription to Sentiment Trader so you can monitor actual market sentiment and not the typical sentiment that we see. Traders read a couple of blogs and they try to extrapolate sentiment from what they've read on 2 or 3 blogs. That's not real sentiment. You need a subscription to Sentiment Trader to actually monitor the market. So in this first chart here, we've got small trader call buying, and you can see we're just kind of in the middle of the range here, not excessively bullish or pessimistic at this point. Now let me widen this out and show you what sentiment looks like at a market top. So this was the top back in 2007, and keep in mind this wasn't even a bubble. The bubble in 2007 was in the real estate market, but this is what a market top looks like when mom and pop are all in on the market. And you can see here we aren't really even close. We haven't even been close during this whole bull market rally. And now let me widen this out to include 2000, which was a bubble top, and you can see sentiment was very extreme at this top. Compared to today, we're just nowhere near the kind of sentiment that would indicate that the bull market is ready to roll over and crash or start a bear market like so many analysts are calling for right now. And the next chart is the robo ratio, which is very similar, maybe even a purer gauge of small trader, mom and pop type sentiment. And again, you can see we just really aren't, and this is an inverse chart, but we really, even though the market has rallied uh, for many years here out of this bottom, we still really aren't at the kind of sentiment extremes that we would tend to see even at a just a bull market top like we had here in 2007, or a bubble top like we had in 2000. So again, I'm going to say, based on sentiment, we're not at the stage yet where we're everyone is chasing their neighbor, trying to make money off the market, and at risk of running out of buyers. So I'll say it again. We're going to see this. We're going to see every other day somebody's going to try and call a top. We're going to see reasons given for why the bull market is ready to end and a new bear market begin, and none of them are valid until we get to the stage where we just run out of buyers. And as I've shown in the last two charts here, we're just not at that stage yet. And a lot of that is the function of how severe this last bear market was. This was the second most damaging bear market in history. Price was stretched extremely far to the downside. We had a panic selling event only comparable to one other time in history, and that's back in the early 30s. And so it's not it's not unrealistic that we would see sentiment just very depressed for many years. And so there's just a lot of fuel for this bull market to continue rising. And as of September 2017, we just you can just ignore all of these analysts that are trying to call a top. We're not going to get a top because the Fed is raising rates. We're not going to get a top because North Korea is shooting missiles. We're not going to get a top because valuations are a bit high. Tops just don't occur until we run out of buyers. And as I've shown on the last two charts, we just aren't really near those kind of sentiment levels yet. So plenty of room yet for this bull market to continue higher. And I think we are going to end this bull market with a parabolic move, very similar to what happened in 2000 and in 2007, although, as I pointed out, the bubble in 2007 was in the real estate market. But the Fed has done the same thing. They've kept interest rates too low, too long. Price has gone up for a long period of time, and at some point here, people are going to start chasing their neighbors. They want to make money like their neighbor, or their competitive hedge fund manager is making money, and that's the point at which we'll start to see these sentiment readings moving to levels more indicative of a final bull market top.